Hello traders and investors. The purpose of this video series is to introduce the concepts of the Wyckoff distribution schematic in the context of the 2025 Bitcoin top. The purpose of this series is to help you and me identify the telltale signs of a market top, allowing you to maximize profits while avoiding becoming an exit liquidity for the market maker. When you are actively involved in a market so close to the top, there is always a risk. What we are doing is playing musical chairs. And the purpose is not to be left without a seat when the music stops. Because this session involves advanced technical analysis concepts, and it will take time and effort to explain everything, I have decided to make it a series. Each video will explain one phase of the distribution schematic. After watching the video, put your questions in the comment section. I promise to do my best to answer your questions, and after everything is clear, we will proceed to the next phase. This series is for open-minded traders who want to learn. It is not for the lazy. If you are willing to put in the work, I am eager to do my best to communicate these concepts, regardless of your market experience and technical level. Let's begin. Before we begin, a few disclaimers. 1. I have decided to use an AI voiceover for the video. The reason is that I find making a video with my voice time-consuming. I have to record and re-record everything several times, and even then, I'm not always happy with the outcome. I assure you, I am a real person. If you are extremely unhappy with the AI narration, let me know in the comments, and I will reconsider. 2. This session is an introduction. Before I begin to deal with the Wyckoff theory, I need to establish why I am expecting a top in the first place. I understand that not everyone has the time and attention span for a long lesson. However, if you are willing and able to put in the time and effort, I promise you it will be worth it. Why are we even discussing a bull market top? After all, Trump is president. Financial markets are at all-time highs. It appears as if the U.S. economy dodged the recession bullet. The big beautiful bill has passed, promising trillions of dollars in liquidity that will eventually flow into the financial markets. The Dixie is below the 100 support level, which is excellent for Bitcoin. The future looks bright. I don't presume to know the future. Maybe this bull market will not end anytime soon. However, I have sufficient reasons to be at least careful and look for signs of a coming top. Bear markets don't announce themselves, they creep on you slowly. When everyone has finally agreed that the bear has come, it's already too late. The main reasons why I am expecting a bear market in 2026 are 1. Bitcoin's 4-year cycle, 2. The primary Elliott wave count, 3. The McWhirter 18.6-year cycle. I will break down each component in the following slides. The 4-year cycle. That which is already has been. That which is to be already is. And God seeks out what has gone by. Ecclesiastes 3:15. The Bitcoin 4-year cycle, widely discussed by analysts, serves as a key framework for understanding price patterns. My intention here is to highlight that, from a timing perspective, Bitcoin is likely nearing a cycle top. The cycle typically follows a 3-year uptrend, starting with accumulation 12 to 18 months before a halving, followed by a pre-halving rally, and a post-halving bull market that peaks 12 to 18 months later with all-time highs. This is then followed by a 1-year bear market, characterized by a 70 to 80% price correction, driven by profit-taking and fear. The previous tops in March 2024 and December to January 2025 were not in line with the 4-year cycle, and thereby, we could reasonably expect continuation. This coming top is as close to the 4-year cycle timeline as can be expected. Maybe this time is different, but I don't think so. Another critical point is that for a 48-month cycle, a deviation of 1 or 2 months is to be expected. The Bitcoin top doesn't have to be in Q4 of 2025. It can come early. The Elliott wave primary count. According to my count, this cycle of a primary degree began in November 2022. There are 2 possible interpretations of the chart that I find most plausible. The first count is more bearish, but from a time and price perspective, it has a better look. I will present both options. However, I think that the bearish chart should not be ignored. because according to it, Bitcoin is in the final stage of the bull market. Option A, the bearish count. According to this count, Bitcoin's formal top was in January 2025. Before you ask, yes, it is possible for an asset to make higher highs and remain within the frame of overall correction. It is called an overshooting wave B. The reason this count has merit is that from the perspective of the time and Fibonacci price retracements and extensions, this chart has better proportions. For example, according to the so-called bearish chart, Bitcoin's wave 2 was a shallow and simple correction in an ABC zigzag pattern. The following correction in wave 4 was complex in a WXY pattern satisfying the principle of alternation, all the while maintaining the same price and time proportions of wave 2. I have other reasons why I prefer this count, but I don't want to go into too much detail because it is not the main topic of this series. Option B, bullish. According to this count, Bitcoin had a very extended wave 3, which ended in December 2024 at $109,400. It then proceeded to make a wave 4 correction, which ended in April 2025 at approximately $74,000. If this count is correct, Bitcoin is currently at wave 3 of 5, which could easily take Bitcoin's price to $130,000, even more before making another pullback. Summary: according to option A, the bearish count, Bitcoin is not likely to substantially surpass the $140,000 mark. In comparison, option B leaves the door open to much higher prices, possibly as high as $160,000. We have two probable counts. Both counts have two things in common. One, both charts show a possibility of a higher price before the decline. Two, both charts show that Bitcoin is very close to a top. The difference between the charts is that according to the bearish chart, Bitcoin is already in a correction, and the chances of a pattern failure are higher. The McWhirter 18.6-year cycle. In her 1937 book, Astrology and Stock Market Forecasting, Louise McWhirter linked the 18.6-year retrograde transit of the moon's north node through the zodiac to financial markets' boom and bust cycles. According to McWhirter, the economic business cycle reaches a low point when the north node passes through Pisces and Aquarius. The cycle is most robust as the node moves retrograde from Scorpio through Taurus, with the peak occurring during its passage through Leo. Admittedly, the McWhirter cycle applies primarily to stocks and real estate. Also, the recession phase is not due until July 2027. In addition, the McWhirter cycle, if it comes to pass, will invalidate, at least to a degree, the Bitcoin 4-year cycle. My reasons for accepting the McWhirter cycle as possible are: 1. 2027 is 20 years forward from the great financial crisis of 2007 and 2008. 2. Based on Bitcoin's Elliott wave cycle count, a prolonged multi-year correction is possible. The need to use a multidisciplinary approach to identifying a bull market top. While a multidisciplinary approach to identifying a bull market top adds complexity, violating the KISS, keep it simple principle, it offers traders a distinct edge by: 1. Protecting against bull and bear traps in a manipulative and emotional market environment. 2. Providing multiple layers of confirmation when a single analysis method is unclear or inconclusive. 3. Providing clear validation and invalidation points to determine market bias effectively. 4. Enhancing trading plan efficiency with precise take-profit targets in a clear trade timeline. The Wyckoff method, Elliott wave analysis, and market structure are the main pillars of this paper. However, I utilize market cycles and Gann lore in certain instances to help pinpoint the possible market top from both price and time perspectives. So far, I have explained 1. Why a bull market top is likely in 2025. 2. The importance of using a multidisciplinary approach to chart analysis. In the next lesson, we will dive into the core of the Wyckoff theory and explore the concept of distribution and the initial phase of the distribution schematic. Stay tuned.